Hello guys, welcome back to yet another episode, and in today's lesson we are going to look into a new concept. So let's start Forex trading. This is lesson number 11, and for today's lesson we are going to learn a concept called Fibonacci. This is a concept which is very important, and it's very crucial for you to apply the right way into the market. So I'll be showing you how you can get to use this concept of Fibonacci and some of the concept, some of the key elements you need to know about this Fibonacci and how you can get to apply it into the real market. But before we get into that, if you're new to this channel, I'll just request you to just go ahead, make sure you hit the subscribe button. It's just below here. Also turn on the notification bell so that I don't miss this kind of videos each and every single time I have a new episode. You always be the first one to be notified. Another important thing also to know is that this concept I'm introducing you into, they apply real time into the market. So with the Fibonacci, it has a couple of levels that are very important for you to know. Let's look into Fibonacci retracement, and the key levels with Fibonacci you need to know is one, we have 0.382, we have 0.5, and we have 0.618, 0.79, and of course we have the 1. So for my case, I'm a fan of using either 0.618 or 0.9, that is 0.79. I normally use these levels really so many times, since they really work into the market. So with the Fibonacci, let me just give you a concept. I just give an illustration. For example, here, for instance, we have a market which is on an uptrend. So like that. So this is an uptrend market. So with the Fibonacci, how do you get to use this Fibonacci, and how can it help you to know where the market is heading and where to place your stop loss, as well as how far is the market going to retrace? So here's the thing. We normally draw the Fibonacci. For instance, you want to know your take profit from here. You just draw your Fibonacci from the highest point. So the 0 key level of the Fibonacci should be here, while the 1 should be here. So you pull the Fibonacci from here to here, and then you realize that in between here we have 0.31, that is 3.18, we have 0.5, and of course we have 0.618 and 0.798. In most cases, you see this zone in between 0.5, that is in between 0.5 and 0.618. This one is normally considered the golden zone. And the reason why it's called the golden zone is because most of the time when the market gets to pull back, it normally touches either 0.5, 0.618, and then it continues going up. So for this case, you'll just place your stop loss. I normally prefer placing my stop loss here. I get to place my stop loss around 0. This is my stop loss. I get to place my stop loss at 0.719, and then of course my entry will be somewhere here. This will be my entry point. Then my take profit will be somewhere right here. Mostly I normally focus into a ratio of 2:1. So meaning the profit part I consider it to be 2, and the stop loss part should be 1. So sometimes I get even to go to 4.1, 3:1, but my minimum is 2:1. So it's important for you to know that. So with the Fibonacci, it really helps you to know how far the market is going to retrace, and of course it also gets to help you to know where exactly can you get to place your stop loss, so that the market can't go below that area, and how far the market is going to unfold going on the other direction. So that's a scenario with the uptrend. So how about the downtrend scenario? So for the downtrend, it's just the opposite of this. So with this, let me just give an example with the downtrend. So with the downtrend, let's say for example the market is going like that. So what you do, you get to pull your Fibonacci from this spot here. You get to pull your Fibonacci from here. This should be your 0, then this should be your 1. So approximately somewhere here you have 0.318, we have 0.5, we have 0.618, and then we have 0.79. so as I said, this is the hot zone. It's called the golden zone. So in most cases the market gets to drop some weeks around here before the market proceeding and unfolding on the other direction. So for this case, you'll just come here, place your stop loss at 0.79. so I place my stop loss around here. This is my stop loss. My entry definitely will be around in between the 0.5. That will be your entry point. Then of course your take profit will be around this area. Take profit will be around somewhere there. So it's important for you to take note on this, and of course get to identify these 0.5 and 6.18 into the market, so that every time you get to pull the Fibonacci and you get to identify this zone, you just be patient enough to wait for the market to just go ahead and get to be done with touching this zone, and then you can now get right the market going downwards. So basically Fibonacci, it's also called the Fibonacci retracement. It's just a concept, it's another confluencer that you can get to add into your strategy, so that you get to even understand more about the market, and of course to get it right when it comes to where the market is about to head, and how you can get to place your stop loss as well as your entry points. So with the Fibonacci, it's not any complicated. It doesn't have any complicated concept. But in our next lesson, we'll be combining our Fibonacci both with the zones. So with the zone is whereby, remember, now let me just introduce the concept. For instance, let me just combine the Fibonacci both with the support and resistance. Fibonacci plus that is support plus resistance. So for this case, for instance, the market is going like this. So first thing first, you get to draw the zones. These are what we call the zones. We start with drawing the zones. For instance, you can get to draw a zone right here. That's a very good area to draw. This is the zone, meaning you can see the market was struggling to break this zone. Then finally the market got to break this zone, and you can see after breaking the zone, it's now bouncing on the upper side. So here's the thing, you get to pull your Fibonacci, you place your 0 right there, then you get to place your 1 right here. So in most cases, you realize this zone normally forms in most cases in between 0.5 and 0.618. So when placing your stop loss, you just place your stop loss around here. This will be a stop loss area, and of course your entry after here, you get the bullish entry reasons, and with the entry reasons, we look for things such as 1, we get to look for bullish engulfing candle. 2, we get to look at morning star. Of course 3, we get to look at what? 3, we get to look at things like a double bottom, and then 4, we get to look at things such as we are talking of the hammer. So with these 4 things, any one of them forming around here after the market has already bounced from the zone, as well as after pulling Fibonacci, you realize this zone is the golden zone, you are good to go. And having those 2 confluences, they're enough for you to get into the market, and of course place your stop loss just below here, and of course anticipate to have your TP somewhere above there, and that way that's how we get to trade Forex. Very simple concept. You get to do this over and over and over, you realize how easy this trading thing is. So that's it for today, guys. In case you have any questions, talk to me on the comment section, and I'll be happy to take you through every single one of them, as long as you're willing, that is, and for real. Let's close the thing. So if you haven't hit the subscribe button, please do, and of course turn on the notification bell, so that whenever I have a concept like this one, you always be the first one and to be notified. That's it for today, and of course I'll be looking forward to seeing you in our next